Pleasure having you on the show. Thank you very much for joining in. First, what is your broad sense that you've been getting from your clients, given that the market is at all-time highs and valuations are not cheap?
So I think, if I look at the interest at our conference here, both from the quality of corporates that are participating, and then the quality of investors who are attending, the interest in India continues to be significant and deep. People continue to believe that India is a bright spot in what now is a even more unstable world. We know what happened in the United Kingdom in elections last week. We know the ongoing struggle in the United States. And I'd like to believe that the interest in India, therefore, is high. Obviously, people believe that valuations have moved fast, that stocks in India are expensive. But again, if you ask them a question from a 3 to 5 to 10-year perspective, the long-only investors continue to believe that the entry point may be a little high, but there is enough value in the Indian market going forward over a long period of time.
So, Mr. Wadhwa, if people want to enter, where do they want to be in India? Which are the sectors which are sort of hot, where you're hearing a lot of discussions?
I think the favored continues to be banking, financial services, and the consumption story. Those are clearly two big pockets which continue to attract interest and investment. I'm starting to hear for the first time people wanting to look at infrastructure and people wanting to look at companies that are considering a capex cycle, which I think is truly heartening, because I've long said that we need to see investments going into infrastructure and in the capex cycle to believe that India's growth over a long period of time is now sustainable. Just consumption-led growth can only take us so far and not beyond that. But at this conference, I'm seeing interest for the first time both in investments in infrastructure industry as well as investments in capex cycles. I'm also hearing a lot about, will government do enough in terms of public sector banks? There seems to be decent amount of appetite to want to invest in select public sector banks, provided government raises more capital. And I think that, again, is a very, very positive sign.
Okay, well, talking about PSU banks, there are a lot of reports, Mr. Wadhwa, of possible mergers between them in the next couple of months. You've been a banker yourself. Do you expect something big bang in terms of a merger to happen within the PSU space?
This government has shown vision and forward thinking. This government has shown ability and desire not to accept status quo, but to do transformational, take transformational steps. And therefore, I would believe that it is well within the ambit of this government to be able to initiate the process of consolidation within public sector banks. What one needs to be cautious about is how do you consolidate and make sure that the few strong public sector banks that we have, their valuation and their value does not get diluted because they have to carry relatively weaker public sector banks. And therefore, the nature of the consolidatee and the characteristic of the consolidatee and what impact that consolidatee has through the consolidation process on the consolidator is going to be a very vital element in terms of creating vitality within our PSU banking system. But without doubt in my mind, the finance minister is committed to finding a solution, and I have no doubts that we can expect something transformational in the near future.
Well, that's what we are all waiting for, Mr. Wadhwa. Now, the NPA problem is far from being resolved. We are awaiting, of course, the details of that RBI framework. But would mergers be the right way to go in terms of finding answers to the NPA mess?
So the NPA problem is, I would argue, the biggest roadblock to the consolidation process. If you merge weak banks with each other, you're creating a relatively weak consolidated bank, and God alone knows how that consolidated bank will be able to raise capital and survive in the future. If you merge weak banks with some of the stronger banks, which would be, I would guess, the government's inclination, the concern I would have is, are you going to allow the consolidated bank to raise capital even if the government ownership goes below 51%. Because there's no debate in my mind that there is enough and more capital waiting both in India and outside to be invested in public sector banks through this consolidation process. But for that, the government will have to accept that government ownership is coming down below 51%. If you have a weak bank merge with a strong bank and you don't allow the consolidated bank to raise new capital, then the concern I would have is the consolidated bank weaker than the previous bank and therefore unable to really grow and provide the impetus that India needs at this point of time from PSU banks. Government has to tackle the NPA issue, and I'd like to believe that one of the ways to tackle the NPA issue is perhaps consolidation. Because today, if you try and address the NPA issue, there isn't enough capital with the weaker banks to be able to acknowledge all of the NPAs and stress that they have on their balance sheet. But if you consolidate and you allow the consolidated banks to raise enough new capital, all of which is available, I think that's the long-term solution.
All right, Mr. Wadhwa, thank you so much.
Our conversation with Mr. Ashok Wadhwa of Ambit. Sir, we also wanted your view on two sectors specifically which have been under the cloud of late but seeing some amount of resurgence now, IT and pharmaceuticals.
So let's talk about pharma first. Clearly, this is a sector that over the last 12 months has really not participated in the growth of the market cycle. And there are a variety of issues. At the valuations at which pharma companies are trading, we are seeing serious interest coming in from investors. Obviously, people are a little cautious and wary and want to hear and see how government policies and regulations affect the future of these pharma companies. But clearly at these valuations there is an interest. As far as IT is concerned, we are still seeing a bit of skepticism. We are still seeing a bit of wait and watch. Nobody is prepared to say that developments around the world, both in the fintech space as well as in the United States, at this point of time augur well for the IT industry, and therefore more and more people are saying too early to take a call. So pharma seems to be starting to generate interest thanks to the valuations at which pharma stocks are trading, but IT continues to be a wait and watch story at this point of time.
Mr. Wadhwa, the next big event obviously the market is running into is the 1st of July and GST is all set to become a reality. What is your sense? Will we see disruptions in supply chain? Will that mean disruption in earnings in the next 1 or 2 quarters? What's your understanding of this whole mega transition that we are getting into? And if we do see lower prices, will it be a good time to buy these stocks?
Listen, the next 6 months are going to be chaotic. Supply chain is going to be very badly affected. Companies think that they are well prepared, but once GST implementation begins, you are only as well prepared as your supplier and as your customer is because of the way the process will flow. So the next 6 months are going to be chaotic. It may mean that companies report lower revenues. It may mean, lesser demand. It may mean supply chain, as I said, being broken down for a period of time. But we are not looking at it from a 6 or 9 or 12-month period. We are looking at this from a 3 to 5 to 10-year perspective. And there's no debate that GST is the most important and transformational step that any government has taken. And moving towards GST over a 5 to 10-year period will create immense amount of value for these high-quality companies that are both tax and regulatory compliant.
Okay, quick last question then, Mr. Wadhwa. What do you make of the farm loan waiver which was announced by the Maharashtra government? And will such measures discourage fresh FII money?
Yeah, I think the only thing that the government needs to be cautious about, if I may use that word, is that not to introduce too many populist measures that affect economics broadly. If the government is seen as bending towards populist measures and compromising on economics, I think everybody in the world understands that some element of that, given the history that was inherited, will be necessary. So long as your populist measures do not impact your financial prudence, and there's a lot to be gained, as I said, in terms of buoyancy in tax collections, in terms of hopefully divestment that the government is doing, and many other programs through which government is looking at raising more money. so long as your populist measures are more than adequately balanced by the financial gains that the government has, and you continue to maintain your balance sheet and your P&L in a healthy situation, I don't think there is any serious worry. But if the populist measures was to start affecting your financial prudence, then of course investors would worry, because one of the things that's working well for India with global investors is that in India, and this government has shown phenomenal amount of financial prudence in the manner in which they have both done the budget exercise as well as allocated expenses.
All right. Well, Mr. Wadhwa, we'll have to leave it there. But thanks so much for